Goldman Sachs has revised its oil price forecast up. The investment bank now sees $85 oil as soon as the fourth quarter of this year. The increased oil price forecast is due to predictions for a colder than expected winter and natural gas prices that are out of this world. That tightness in global gas supplies is a decidedly bullish catalyst for crude oil, Goldman said over the weekend. Goldman sees oil demand jumping by nearly 1 million barrels per day if the winter is colder than normal in the northern hemisphere. And oil demand may just grow for significantly longer than many expect, according to oil expert Anas Al-Haji at a recent energy conference hosted by Nigeria, because renewables are unable to replace fossil fuels quickly. According to Al-Haji, the impact that climate change policies will have on oil demand have been overblown. The impact will dent growth, not demand itself. As a result, global oil demand will continue to grow even after 2050, decades after many analysts see peak oil demand. Al-Haji did not completely discount the energy transition, just that it may go slower than many would like. Even OPEC shifted its oil demand outlook. According to the World Outlook 2020, OPEC now sees global oil demand exceeding pre-pandemic levels next year, and growing until the late 2030s, at which point it will plateau. Projections for peak oil demand have been around for decades, and even oil major BP, who is aggressively transitioning from oil and gas to renewables, this year said that the pandemic had ushered in the era of peak oil demand, which it saw as behind us in 2019. With widely differing projections, it is difficult for the oil market to differentiate between demand figures based on sober estimates and which are based on wishful thinking.